Reading crypto charts is essential for anyone looking to trade or invest in cryptocurrencies. Here's a step-by-step guide to mastering crypto charts like a pro. Understand the basics. Candlesticks are the most common way to display price data. Each candlestick shows the open price, where the price started during the time frame, the close price, where the price ended during the time frame, and the high-low, which are the highest and lowest prices during the time frame. Green or white candles indicate price increases, while red or black candles show decreases. Time frames are important as crypto charts can show different time intervals, such as 1 minute, 1 hour, or 1 day. Choose a time frame that suits your trading strategy. Short-term traders typically use smaller intervals, like 5-minute or 1 hour, while long-term investors prefer larger intervals, such as daily or weekly. Next, learn key indicators. Moving averages smooth out price action to identify trends. The simple moving average, or SMA, is the average price over a specific period, while the exponential moving average, or EMA, gives more weight to recent prices. The Relative Strength Index, or RSI, measures momentum and identifies overbought or oversold conditions. An RSI greater than 70 indicates overbought conditions, which can be a potential sell signal, while an RSI less than 30 indicates oversold conditions, which can be a potential buy signal. The MACD, or Moving Average Convergence Divergence, shows trend strength and reversals, with a signal line cross indicating potential buy or sell opportunities. Volume indicates how much of the cryptocurrency is being traded, and high volume often confirms the strength of price movement. Now, identify trends. An uptrend is characterized by higher highs and higher lows, while a downtrend shows lower highs and lower lows. A sideways trend occurs when the price moves within a range without clear direction. Use trend lines to visually identify these patterns on the chart. Spot key patterns, such as support and resistance levels, where the price tends to stop and reverse. Support is a price level where demand is strong enough to prevent further decline, while resistance is a price level where selling pressure prevents further rise. Chart patterns can help predict potential price movements, like head and shoulders, which indicates a reversal from an uptrend to a downtrend, or double top-bottom patterns that indicate a trend reversal. Triangles can show continuation or breakout potential. Use advanced tools like Fibonacci retracements to identify potential support and resistance levels, and Bollinger Bands to show volatility by plotting standard deviations above and below a moving average. Analyze sentiment, as crypto markets are heavily influenced by sentiment. Tools like the Fear and Greed Index measure market emotions, and social media trends and news can provide insight into potential price movements. Practice risk management by never risking more than you can afford to lose, using stop-loss orders to minimize losses, and diversifying your portfolio. Utilize charting platforms like TradingView, Binance, or Coinbase, which provide user-friendly charting tools with built-in indicators. Backtest your strategies by practicing reading charts and testing your strategies using historical data to build confidence. Finally, stay updated, as crypto markets are volatile and influenced by global events. Regularly update your knowledge and adapt your strategies as needed. By mastering these techniques and practicing regularly, you'll develop the skills to read crypto charts and make informed trading decisions like a pro.